Hey, this is Justin with daytradethemarkets.com, and in this video I wanted to talk about a topic that we discuss a lot about being flexible throughout it, mentally flexible throughout a trading day. In other words, not getting locked into one opinion, one bias, one thought, okay? And I'm just going to use an example from earlier today. We were talking about this as it was happening in real time in our live education room today, and people thought it was pretty interesting. So I thought I would just pass it along. And again, whether you use a completely different strategy than what we have, or whether this is something you're interested in, the same principles would apply. And the idea is that you need to be flexible in that what might be true right now, what the evidence might be saying right this minute, might be different in 2 minutes. It might be different in 10 minutes, might be different in 2 hours, but if we get locked in, then we're unable to kind of adjust as evidence unfolds. And it's so important to just follow the evidence when we trade. So let me give an example of a potential trade from earlier today. And what we have here, I want to talk about what we call a potential long trade here, where these two boxes overlap. We call this a box overlap trade in this area. You can see this is a box right here. Here's another box right here. Where these two boxes overlap, we would expect to offer some good support, and therefore could be a good place to place a long. Now, what we also want to do whenever we're looking at a trade, we want to analyze the evidence. And what we see is that big picture, we have a leaning up bias. And whenever we're leaning up or up, this is known prior to the day, that means all things equal, we'd rather take a long. Now, on the zone level, this is our support and resistance. We do have potential resistance above here at 28.27. Doesn't mean the market can't get through that. It just means that it's going to take some pretty good buying energy to get through there. It's probably going to bump its head on there a little bit before it can go through. That's the thought process. Or it's going to hold as resistance. We just know that this is potentially, at a minimum, a speed bump for the buyers. So that's a little bit of a negative. And then we have these two boxes, like I mentioned before. Here's a buying box and here's another buying box. And these are telling us that the buyers are relatively active at this moment in time. This is at 9:51 Eastern time today. So it's telling us, if we're going to analyze this trade, this is a pretty good trade, kind of what we would call a 2 out of 3 trade. So in other words, on our big picture bias, it is leaning up, which is bullish in isolation. On our zone level, however, we are approaching, zone resistance, okay, which is a little bit of a bearish indication. However, then on our box level, which we also like to look at, we have stacking buying boxes. Okay, that's a bullish indication. So that tells us that, it's 2 out of 3 are leaning to the upside. That's probably a trade we would consider taking right in there. Okay, so what you can do at this moment in time at 9:51, we would probably, consider putting in a limit order right there and just leaving it be and knowing that it should be a pretty good spot to get long right in that area, right? The middle of this overlap of these two boxes. Now let's roll it forward. And again, that makes a lot of sense as of 9:51 Eastern time, right? Now, but again, we want to be flexible. So let's just kind of see what develops. And you could see that here as of, this is at 9:55 Eastern, we have a structure that we call a box rejection. And what that means is that we tested above the high of this box, but the buyers weren't really comfortable up here. We didn't blow through here. We didn't spend a lot of time up here. Instead, we very quickly rejected, and kind of like a turtle sticking its head out of its shell here, and quickly came right back down inside of the shell, right? So again, is this box rejection the end of the world? Does this mean buyers are dead and sellers are coming in? No, that's not what it means, but it is a little bit of a red flag. It is a little bit of a warning sign that, maybe there's a little bit more risk here than we first thought, right? So in other words, at 9:51, this looks like a great spot. At 9:55, not quite as good of a spot. So what we were talking about during the live session is if you had a limit order here, you probably don't want to use a limit order anymore. You probably want to wait and see if the market can kind of do the opposite of what it did here and maybe test right below and get quickly back right back in, right? That would be a box rejection on the low side. Some kind of a rejection, a test here and a rejection. Now, in other words, we're reducing our risk instead of a limit order because we now have two red flags. We have the resistance up here and this box rejection. Instead of a limit order, probably want to wait for some confirmation, right? But hopefully that makes sense. We're just adjusting as we're seeing new evidence, right? We're flexible mentally as we see new evidence. So let's kind of wait and see as it comes down here. Let's see what it's going to do for us when we come down here. Can we get a rejection? Well, before we do, and again, this is our spot right in here, but before we get down there, you can see we get this level 2 or strong selling aggression bar. Now, again, on its own, does that mean it's the end of the world for buyers? No, but it's kind of our third red flag, right? We came close to this resistance, not the end of the world for longs, but not a great sign. We had box rejection right here, not the end of the world, but now we've got two red flags. And then here's our third red flag, a level 2 selling aggression bar. So all of a sudden, what at 9:51 looked like an amazing opportunity, all of a sudden is at 10:06, 15 minutes later Eastern time, it's a lot more risky than it was at that moment. So again, if you're at 9:51, you got locked into I'm going long, I'm going long, I'm going long, then you're going to end up getting stopped out because we say it just took right off, right? The selling aggression there tells us this got a lot more dangerous. You put those three things together, and you know that you're in a lot, in some trouble. So you can avoid, a trade like that just by letting the evidence kind of add up, right? Being flexible mentally. That's something that we talk about all the time. You just, at least the way that I teach it, we have different pieces of evidence that we can look at, and we want to kind of throw those in our mixing bowl and see what comes out and make sure that it makes sense to take a trade. We're not always going to be right by any means, but we know that if we do that consistently, we can control our risk and we can have an edge on most of the trades that we take. Now, again, if you can be flexible and kind of adjust and say, okay, what's true right now? Okay, well, that might be not true in 5 minutes. It might not be true in a half an hour, and so forth. So I thought that was a good example. People tended to, said that it was helpful this morning, so I thought I would share that to a wider audience as well. Hopefully you found that beneficial, and if you have any questions on that, let us know. Thanks.